It promised financial freedom, daily crypto payouts, and the kind of returns that sounded too good to be true. Because they were. This is the story of PlusToken, the crypto wallet app that turned into one of the largest Ponzi schemes in history, scamming users out of more than $2 billion before vanishing into the shadows. You're watching The Crypto Historian, where the past is encrypted and the truth is worth mining. In mid-2018, a flashy new app began spreading like wildfire across Asia. It wasn't just another crypto wallet, it was sold as a revolution in decentralized finance. Called PlusToken, it promised to pay users daily interest on their crypto holdings, as high as 10% to 30% per month, simply for storing Bitcoin, Ethereum, or EOS in the app. Some investors were promised as much as 1% daily returns, compounded. The model was addictive. Users earned more by recruiting others, and those recruits were encouraged to do the same. It was a textbook example of multi-level marketing, but dressed in crypto terminology and slick branding. Promoters hosted glitzy conferences in Seoul, Kuala Lumpur, and Beijing. The founders flashed wealth, luxury cars, designer clothes, and massive banners proclaimed PlusToken as the future of finance. The company claimed to be based in South Korea, boasting an advanced AI-driven arbitrage trading bot named PlusAI Dog that would capitalize on price differences across global crypto exchanges. There was no verifiable evidence of such a bot. Behind the curtain, figures like Chen Bo and other Chinese nationals orchestrated everything through a complex web of offshore shell companies. By early 2019, PlusToken had attracted over 3 million users from China, Korea, Japan, Vietnam, and beyond. It was estimated to be holding 200,000 BTC, 789,000 ETH, 26 million EOS, collectively worth over $2 billion USD at the time. But behind the scenes, none of this money was being invested. There was no trading, no interest generation, just a massive funnel of new deposits flowing to the top. By June 2019, cracks began to show. Users reported delays in withdrawing funds. The app experienced mysterious technical issues. Support channels went silent. Panic set in. Then came the bombshell. 6 Chinese nationals connected to PlusToken were arrested in Vanuatu, a remote island nation in the Pacific. Authorities had traced them across borders. The PlusToken servers went dark. Investors were left holding the bag. The money was gone. Investigators confirmed the worst. PlusToken was a Ponzi scheme. Early users were paid using deposits from new ones. None of the funds were traded. The scheme collapsed once new money stopped flowing. Unlike most financial frauds, PlusToken left a clear trail. The blockchain never forgets. Firms like Chainalysis and CipherTrace began tracing the movement of stolen funds. They discovered that the scammers were laundering assets using a method known as peel chaining, breaking large amounts of crypto into thousands of small transactions to obscure the trail. These funds were then funneled through Asian exchanges like Huobi and OKEX, as well as over-the-counter markets, likely using insider help. One analysis showed that in late 2019, large sell-offs of PlusToken BTC directly contributed to Bitcoin's price crashing from $13,000 to below $7,000. The selling pressure created by the PlusToken operators disrupted the entire crypto market. They cashed out an estimated $1.3 billion before law enforcement made any real progress. By mid-2020, Chinese law enforcement had arrested 109 individuals involved with PlusToken, including 27 core ringleaders. Prosecutors revealed a sophisticated operation that spanned multiple countries and defrauded more than 2.6 million victims, involving over 14 billion yuan. The seized assets included 194,775 BTC, 833,083 ETH, 1.4 million LTC, 27.6 million EOS, 74,000 total value, over $4 billion USD at the time of seizure. Most of the leaders were sentenced to 2 to 11 years in prison, and fines ranged into the millions. The Chinese government later claimed it had liquidated the crypto assets and returned the proceeds to the national treasury. But not all was accounted for. Key wallets remained active even after arrests, leading some analysts to believe that not all conspirators were caught. Rumors suggest a portion of funds may have been hidden using privacy coins like Monero, or laundered through Russian exchange services. PlusToken's collapse devastated millions. Entire life savings were lost. Communities that pooled funds together were wiped out. For many, this was their first crypto experience, and it left them bitter and broken. But the impact went further. South Korea and China cracked down on crypto pyramid schemes. Blockchain forensics firms gained massive credibility. PlusToken became a case study in every major crypto compliance department. The scam also pushed crypto exchanges to implement stricter KYC rules, and governments around the world began collaborating on cross-border digital crime investigations. Still, questions remain. Who helped launder the money? Where are the missing funds? And could it happen again? PlusToken was more than just a scam. It was a warning. Crypto can be liberating, but without transparency and accountability, it can also be devastating. The next time someone promises guaranteed crypto returns with daily payouts and zero risk, remember this story. You've been watching The Crypto Historian, where the past is encrypted and the truth is worth mining. If you found this episode valuable, drop a like, leave a comment, and subscribe for more deep dives into crypto's most outrageous moments. Next up, Terra Luna, the algorithmic stablecoin experiment that burned billions and took the entire crypto world down with it.